A few weeks ago, I met with a business owner who operates a consulting business. He reported annual revenues of approximately $280,000 last year and had been working with the same CPA for roughly 6 years. I reviewed his last 3 years tax return and I had to tell him something nobody wants to hear. You didn't do anything wrong, but you have been overpaying the IRS by roughly $32,000 every year. And he asked me the question everyone asks. Why didn't my accountant tell me? Well, the answer to the question is exactly what this video is about. Because here is the truth. His accountant may have been doing their job perfectly. The problem is he hired them for the wrong job. Think of it this way, a tax preparer is like a court reporter. They accurately document what already happened. A tax strategist is more like an architect. They help design the plan before the decisions are made. So the problem isn't that your tax preparer did something wrong. Tax preparation and tax planning are simply two different jobs. And once your business is making $150,000, $200,000, or even more, the difference can become significant. There may be thousands, sometimes tens of thousands of dollars in tax planning opportunities, depending on your situation. So where do these opportunities usually hide? There are 4 blind spots, and I want every business owner watching this video to understand. First, your business structure. You may have chosen your business structure years ago because it was simple, not because it was tax efficient. A structure that made sense when your business was making $50,000 or $60,000 may not make sense when it's making $200,000. For example, a properly structured S corporation may reduce self-employment taxes in the right situation, while still requiring you to pay yourself reasonable compensation. And for some profitable business owners, that difference alone can translate into significant tax savings, annual tax savings. Second, you are saving for retirement like an employee when the tax code hands business owners tools that can shelter several times more. Third, legal deductions that nobody mentions. The Augusta rule, hiring your children, home office, shareholders and directors meetings, and these are not loopholes, but they don't apply themselves. They require planning before year end, which brings us to the 4th blind spot, which is the calendar. Most business owners think that taxes happened in April, while the game is already over and you are just reading out the score. Real tax planning happens mid-year, while there is still chance to change the outcome. So back to the business owner from the beginning. Same business, same revenue, same effort. We restructured his entity, set up the right retirement plan, documented the deductions he was already entitled to, and his tax liability came down significantly. Fully compliant, fully documented, that's what planning looks like, and that's what we do at Tax Square. If you are earning over $150,000 and if nobody has ever walked you through these 4 blind spots, that's your sign. The link below books a strategy session, real conversation, real CPA, no sales pressure. And if you become a client and you don't see the value, you can leave. There is absolutely no long-term obligation. Book a free consultation today and see how much we can help you put back in your pocket. Thank you.